All right, so today we're going to be going over how to spot high probability supply and demand setups, and also how to know when the supply and demand setup is invalid and when it's not good to take one, right? So I'm gonna just be going over it really quick, trying to give you guys some helpful tips here, so you guys don't get screwed over like how I used to. After I learned these things, my trading became way better with supply and demand, and I've been avoiding like losses, like way better than I used to, right? So first on Nasdaq, I have all the I'm gonna go over like the setups that you should be taking, right? And then on GU, I have setups that you shouldn't be taking. So we're gonna start off on Nas, and these are all the setups that like are high probability and like have a higher win rate, right? So the first thing, all right, before we even go to the chart, right? The first thing when it comes to trend supply and demand is you want to look for a couple things, right? Now your zone needs to have a gap or gaps attached to it, and it also needs to break structure, whether it's a high or low. It needs to break structure, and then another not like confluence, but it is kind of a confluence. You can use the 200 EMA, right? Make sure you're trading with the trend. Um, make sure that your gap wasn't re-mitigated, and I'll go over that later in the video, right? Because that might be kind of confusing, but we have a collection of candles right here. Now, usually when I draw my supply and demand zones, I only use one candle, or I might use two if the zone is super like small, right? Um, but in this case, like you see how there's like a whole bunch of like they're just all kind of like bodied up like one to another. It's a valid zone. I'm tell you why, right? The zone broke the structure. It left gaps. I don't know if you guys can see, but we have a gap up here. We have a little mini gap. I don't know if you guys can see that too. And also you can see like when it left this orange box, right? You look at the orange box. When this candle left, nothing came back and tapped the zone to make it invalid. Like if this candle's wick came down and like hit the gap, then it would have been invalid. But it didn't, right? So it left the gap, it didn't come back, and when it did come back, the gap was still open. It was still good to go. So you could have easily got in right here. Now for me, I'm mostly getting aggressive. Only some situations I'll wait for a break of candle, like if I'm unsure about a trade. But you can see like, bro, the zone is valid, bro. This is the type of zones you want to be doing. Like you're not gonna be using a bunch of candles every time, but this is a situation where you would, right? You have a lot of candles next to each other. It's a valid zone to close over the high left gaps, and I just don't think it's like in this situation. I just don't think it's coming back to this first candle. So I use the collection of candles, and it's still a valid zone, right? I'll go over the next one too. Now here's the other one. This one is more risky because the 200 EMA is cutting through it, but you can see it still meets all the criteria. Oh wait, nah, this one actually doesn't. I actually chose the wrong zone. I ain't gonna lie, this is insane. I ain't gonna lie. I actually chose the bad zone, but this is supposed to be on the G one. But anyways, this is an example of a low probability demand, but it still played out. Uh, you can see, right? This is what I mean by it. This is perfect. I can go over the little wick thingy, right? So this is perfect. You can see we have the red candle here, right? This was the last red candle before the huge push up that broke this structure, right? So you can see after this green candle closed and it left the zone, this next candle wasn't supposed to come down here and retap the zone. Like when it does that, that's low probability, right? If it would have just made the new candle and just shot up, would have been chilling, right? Because it didn't tap the zone, but it came down, it tapped the zone, then it went up. That's a example of low probability, but that's one that would have still won. So that's the thing. Low probability subs can still win, but you don't want to take them, right? Because they're low probability. But you can see you still could have caught 2-1 almost. You got an aggressive with zero spreads, but that's an example of a low probability one as well. Not as well, but yeah, that's just an example of a low probability one. Here's another demand setup, right? That I got. This is not low probability. I did not mess up this time, but you can see this is the last red candle before the huge push up that ended up breaking structure. It broke all this structure to the left right here. So hold on, I'm messing up. It broke all that structure to the left. It has a gap, and the gap did not get mitigated again. Look, Last red candle. This candle pushes up, closes out of the gap. This candle does come down a little bit, but you can see it doesn't tap the area, right? It leaves the area unmitigated, and you can see when it does come to tap it, you could have gone for a quick scalp, right? And the thing is, we're scalpers. We're not looking to trade for the whole day, bro. You're trying to catch the little moves that the market is making. You could have caught a 1 to 1.58. So that's another good trade, right? And if you would have held it out, I mean, I'm not holding the trade for that long, but you could have got a 2 to 1. I'm not holding the trade, me personally. Like, that's just too long for me, bro. But I would have been fine with just that 1.58 RR and would have kept my day moving, right? So let's go over another one. Now, right here, we have a high probability supply setup. Why is this high probability supply, you may ask? Well, look, came down, we closed below this low right here. You see right here, we closed below it, we left gaps, and the gap did not get the zone did not get mitigated, right? So you can see this is the last green candle before the huge push down, right? You can see red candle comes, we close out of it. The next red candle goes up a little bit, doesn't tap our zone though. It doesn't tap our zone, and we can see we keep going down, and then when we come back up, that's when you get it for a nice trade, bro. That's when you get it for a nice trade. Now, when it comes to trading these zones, bro, you can either uh you can either trade off the break of the candle, or you can trade aggressive. I like just getting aggressive because like I just bro, if you're risking, you should be fine with what you're risking, bro. Just know your risk. Don't over leverage it or don't over trade. Just know what you're risking, and you should be fine, bro. You gotta be okay with losing, bro. So, but if you did get on the break of candle with this is how it would look, right? It will tap the zone. You can see it just barely tap. I still count that as a tap, but it will tap the zone, and then you would wait for candles to break, right? So this candle doesn't get broke. We form this candle. This candle gets broke down here, and you would enter like that and put your stop above the other candle. But see, the RR is worse. You feel me? Versus if you would have just entered aggressive, um, could have caught like a 5R right here. That's why I like entering aggressive too, because the ratio is like way higher, right? But that's high probability demand for you, or supply and demand. So let me just go over it one more time. You want it to break structure, whether it's a high or low. You want it to have a gap, and you do not want the zone to be remedicated before tapping the zone, right? Before tapping the zone, you do not want it to be remedicated. All right, so now we'll go over to GU to show you guys low probability supply and demand setups, right? So go to GU, and if you guys want this EMA, just search up super secret 200 EMA. It'll pop up. I just found it, and this is the one that just works fine for me, so I use it. But here's some examples of low probability supply and demand setups, right? Um, Now you might be looking at this setup, right? Okay, might be like, okay, we broke straight to the left. We have gaps, right? We have a huge gap here that needs to be filled and stuff. You might be like, why did this fail, right? Well, here's why this zone failed. You see, if we go to the zone, it tapped the zone, right? Hold on, let me put it all the way to the wick. You see, we closed inside the zone, so off this candle, it's still valid, right? It left the zone, but it closed in it, right? We didn't close out of it and come back yet. We still closed in the zone, so we're still chilling, right? It's still a good zone. But you can see the next candle, we come and we wick down into the zone, right? That's already so that's right there is making it low probability, bro. If the zone's already being mitigated before it actually comes back and taps it again, that's a low probability setup, right? You do not want to be taking that setup. You would have lost pretty fast here. And then like most people probably would have got happy off of seeing a reaction, right? They probably would have seen, oh, with the zone, oh, candles are breaking. Probably would have got in and instantly lost, right? Because they don't know, like, you should not be taking a setup like that, right? And this is a counter trend setup. See, the 200 EMA is above it. It's a counter trend setup as well, so you really don't want to be taking that. Let's go to the next one, right? So you might be like, okay, how is this even a supply zone? Well, honestly, this is a pretty bad. Okay, now the next setup I want to go over is this other supply zone right here. Right here you can see. Okay, we have a supply zone marked out. Let's see. We go over the checklist. Okay, we broke this structure right here to the left. We close below it. We have gaps to fill, and we have a strong push. Right, it's strong. It's big, strong candles. But why is this low probability? You might say. Why? What is the reason I'm gonna stay away from a trade like this? Simply because the 200 EMAs come through, right? And the 200 EMAs come through your trade is basically telling you that the market doesn't know which way it wants to go. Like there's no clear direction of where the market wants to go. So it's come through, which is telling you like. So for me, when I see this happening, it's just telling me, okay, stay away from it, bro. Like there's no point in trying to feel me. Just stay away from the trade. Let the market get clear. Let like versus like this, right? And you see it, it's clearly above. I mean, the 200 EMA is clearly below the structure. It was telling you, okay, look for bonds, right? But you can see right here, there's some chop, and it's literally cutting through it, right? It doesn't know which way it wants to go. So that alone would have told me, okay, this is not a high probability setup. So most people would have probably seen it start rejecting a little bit, come down. It didn't really break any candles though, but most people would have probably seen it. Feel me? Start rejecting a little bit, and they would have took this like that and lost. So that's another setup you want to stay away from, right? And then the last low probability setup I want to go over. Uh, we have this supply zone, right? Now you're gonna look at this. You're gonna say, okay, why is this low probability? Okay, we close below that structure. We have gaps. Now, for me, why this is a low probability setup? Simply because it's a super old zone. One thing I don't do is I don't trade super old zones, right? If the zone like this is what at 19, this is at 230. Like honestly, I can't really I don't know what 19 is. I don't feel like thinking about it right now. I don't know what that is to be honest. But no, it's an old zone. Like look at all this structure that had to happen for it to come all the way back up here. You don't want to be taking anything like that, bro. So that alone would have told me, you know, not take this setup. Like it's a bad setup, right? And also you can see, okay, we close out the zone. You can see this wick came and mitigated the zone again. So that's another thing. That's another reason not to take that trade, right? So that's basically it, bro. So to recap, the zones you want to be looking for, right? You want the zone to break structure. You want it to have gaps. You want it to go with your 200 EMA. If you don't have a 200 EMA, put this one on super secret 200 EMA. And you don't want your zone to be mitigated before like how do I say it? You don't want it. You basically just you don't want it to. You don't want the candle to leave the zone and then the next one just come back to the zone and wick inside of it. You don't want it to be mitigated like that again, right? You want your zone to be clear. You want it to be open, and then when it comes back, then that's your cue to sell or buy, right? Those are the zones you want to be taking, right? And that's gonna basically wrap it up. If you guys have any questions or want me to make it more clear, because I know this might have been kind of rushed, seemed kind of rushed, but just let me know in the comments if you want me to go over anything a little bit more, and I'll be glad to do so, right? But anyways, I'll wrap it up, and I'll see you guys in the next one.